Ladies and gentlemen, good day and welcome to Mech Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note, this call is being recorded. I now hand the conference over to Teresa John. Thank you, and over to you, ma'am.
Thank you, Shruti. On behalf of Nirmal Bang Institutional Equities, I would like to welcome you all to the 2Q FY26 earnings call of Power Limited. The management today is represented by Mr. Rohit Sajja, Full-Time Director, Mr. S.K. Ramaiah, Director of Business Development, and Mr. N. Nani Arvind, Chief Financial Officer. I will now hand over to the management for their opening remarks, after which we will open up the floor for Q&A. Thank you, and over to you, sir.
Good morning, everyone. I am Arvind, CEO of the company. I have with me Mr. S.K. Ramaiah, Director Business Development, and Mr. Rohit Sajja, Director Business Development and Operations. I take this opportunity to welcome you all to our Quarter 2 FY26 earnings call. The company's performance for the second quarter of financial year 25-26 remained in line with our set targets, reflecting consistent operational momentum. For Quarter 2 financial year 26, the company reported total income of rupees 1,249 crore, representing 19% increase over the 1,046 crore in Q2 FY25. EBITDA stood at 158 crore, up 18% from rupees 134 crore in the corresponding period last year, while profit after tax was 78 crore, registering a 12% growth compared to 70 crore in Quarter 2 FY25. The EBITDA margin remained stable at 12.7% against 12.8% last year, marginally impacted by higher operating cost. The PAT margin declined from 6.7% to 6.3%, primarily on account of increased finance and depreciation costs. For the half-year FY26, the company delivered a strong performance during the first half of FY25-26, maintaining growth momentum across key parameters. For half-year FY26, the company reported a total income of 2,554 crore, reflecting a 24% increase over 2,062 crore in half-year FY25. EBITDA stood at 340 crore, up 33% from 257 crore in the corresponding period last year, while profit after tax was 159 crore, comparable to 131 crore in half-year FY25. The EBITDA margin improved from 12.5% to 13.3%, supported by the exceptional revenue recognized from the Riverbed Mineral Project in the previous quarter. However, the PAT margin was marginally declined from 6.4% to 6.3%, primarily due to higher finance, depreciation, and tax costs. Revenue mix for the Quarter 2, the company's revenue mix was a mechanical business, 435 crore, up by 90% from 229 crore in Quarter 2 FY25, driven by strong traction in industrial power construction projects. Civil segment, including railways and water distribution projects, 309 crore, down by 22% from 395 crore in Quarter 2 FY25, impacted by extended rains in key projects and delayed bill certifications in the water division. O&M 440 crore, up by 12% from 391 crore, supported by new O&M orders received during the year. Electrical business 22 crore, up 138% from 9 crore of last year FY25 due to execution of railway, civil and signaling telecommunication works during the year. Mining business 31 crore, up by 164% from 12 crore of last year, supported by higher off-take arrangement from sale. Other income of 11 crore compared to 10 crore in Quarter 2 FY25, mainly on account of margin money deposits, increase in the margin money deposits. The geographical mix for the quarter was 95% domestic, 5% international, while power sector contribution remained at 79%, with non-power sector accounting for the remaining 21%. So revenue mix for 6 months for the first half of FY26, the company's revenue mix was mechanical business 658 crore, up by 99% from 331 crore in half-year FY25, driven by strong traction in industrial power construction projects. Civil segments, including railway and water distribution, 890 crore, down by 5% from 937 crore half-year FY25, impacted by extended rains across key sites and delayed bill certification in the water division. O&M division, 837 crore, up 14% from 732 crore in half-year FY25, supported by new order inflows during the period. Electrical business, 89 crore, up 427% from 17 crore in half-year FY25, reflecting a strong execution in railway and civil works and signaling and telecommunication works. Mining business, 57 crore, up 122% from 26 crores in half-year FY25, supported by increased offtake arrangement with SAIL. Other income, 22 crore compared to 19 crore in half-year FY25, primarily due to higher margin money deposits with banks. The financial parameters are concerned, the companies witnessed a marginal reduction in return on equity from 3.4% in FY25 to 3.37% in FY26, primarily due to higher finance and tax costs, which impacted PAT. Similarly, return on capital employed decreased slightly from 4.73% to 4.58%, driven by lower operating margins resulting from the seasonal factors such as extended rains. With the anticipated normalization in collections, with continued strong traction in industrial power construction and ramp up of MDO revenue from the KBP mine starting Q3, both ROE and ROCE are expected to improve in the coming quarters. The company's negative operating cash flow has improved, reducing from 166 crores negative in half-year FY25 to 63 crore negative in half-year FY26, primarily due to the realization of receivables during the period. The company is actively engaging with the clients to expedite certification and clearance processes and is confident of realizing the outstanding dues in the coming months. This is expected to further improve the operating cash flow and reduce the reliance on the working capital limits. Net current asset days, excluding cash and cash equivalents, increased from 128 days in FY25 to 151 days in FY26, primarily due to delays in certification of waterworks and realization of receivables. These delays have resulted in higher current assets. Company is actively pursuing certification and payment clearance with the client, and significant improvement in the net working capital delays is expected post certification and realization of bills in the water division. Gross and net debt levels remained well controlled despite delays in certification of water bills and realization of receivables. As on 30th September 25, the gross debt stood at 839 crore and the net debt is around 360 crore. The average debt equity ratio as on the same date was at 0.37 times. The company is focusing on expediting certification and recovery of bills in the water division, which is expected to further reduce the net debt and the debt equity ratio in the coming quarters. So, order book status during Q2 FY26, the company secured new orders worth of 1042 crore. As of 30th September 25, the order backlog stood at approximately 53,776 crore, with the executable order excluding two MDO projects at 14,226 crore. In Q3 FY26 till date, the company has received new orders worth of 2,577 crore, taking the total order backlog of 56,353 crore, with the executable order book excluding two MDO projects increasing to 16,804 crore. The company continued to actively pursue tenders and is targeting to secure 10,000 crore in the new orders by March 26. During FY26, a significant increase in order inflow is anticipated, particularly from the power sector across segments including O&M, mechanical, civil construction and BOP EPC. As of date, the company has already secured orders worth of 4,889 crore, achieving approximately 49% of the annual target. The company will continue to prioritize high potential areas including industrial plant operations and maintenance, railway and water infrastructure and MDO projects to drive substantial growth and strengthen market leadership. All existing projects are progressing well and remain on track except for the water division, which has experienced delays due to slower bill certification due to non-allocation of funds. For a financial year 26, the company has set a revenue target of 6,500 crore. Subject to the pace of traction in MDO business, EBITDA margins are expected to remain consistent with the FY25 levels, and the company is confident of achieving approximately 25% year-on-year growth, revenue growth. Margins are anticipated to remain stable with potential upside depending on the contribution mix from O&M and mining segments. The order book outlook for the current financial year remains robust, supporting the growth trajectory. Power Mech is well positioned to demonstrate execution and conversion of approximately 40% of its opening order book annually. Additionally, the MDO business is ramping up steadily, and both O&M and MDO segments are expected to be key drivers of the growth in the coming years. So, with reference to our MDO business focus is concerned, KBP mining mobilization of heavy equipment has been completed, and mining operations commenced on 15th of April 25. Till October 25, the company has achieved around 6.15 lakh cubic meters of overburden removal, and the activity is continuing as planned. Coal production is expected to commence in November 25. The mine approach roadworks are in progress, and the company is targeting minimum coal dispatch of 1 million tons during the year, with a plan to scale up of operations to 1.5 million tons. All land required for mining has been handed over to CCL. And the other second mine at the Kalyaneshwari Tasra project, OB removal and coal dispatch operations have been ongoing since January 24, with approximately 8.7 lakh tons of coal produced and dispatched to the existing washeries as per the sale direction. The project received environmental clearance for the 3.5 million tons per annum washery in October 24. So we have appointed design consultants have been appointed for railway sidings and washery development. And the major washery equipment design and vendor finalization have been completed. Equipment mobilization is in progress, and civil construction works have commenced. The washery construction is targeted for completion by September 26. The phase 1 R&R colony spread over 4.5 acres has been completed, and handing over of the project affected families is in progress. Approvals for phase 2 covering 41.11 acres or 41.11 acres are currently under process. While sales current coal offtake remains below the plan due to the limited external washery capacity, the company is actively engaging with stakeholders to resolve these constraints and ramp up the production in the coming months. So with this now, I request Mr. Ramegaru to update on the key business development initiatives and future outlook.
Yeah, thanks Arvind, for all the numbers you have brought out. No, I think as Arvind has rightly said, this business is continually driven on the bullish pace because of the government initiatives in infrastructure, new projects, and many of the other initiatives has been taken. Now private sector also is catching up. But as a company which has got an all-round spread in many segments, power, infra, and then railways, roads, and then export also, we are well positioned to catch up these opportunities. And there can be some variations based on quarter-to-quarter basis in terms of investments and the way the scheduling of the tenders has come. And particularly our key areas of focus will be BHL and then L&T, which are the EPC contractors which have taken bulk of the orders from the developers, NTPC and the generating companies. That is a substantial flow is expected on that in terms of the ordering in the next 6 months, because the initial order pickup was a little bit slow because of the engineering phase which was involved. And that is where we are expecting more opportunities. And other key developers are the Adani group, which we have substantially established a presence in many projects in about 6,000 megawatts and working in about 2,500 crores of opportunities, ongoing jobs. And they also have to do substantial balance ordering of the new projects and all, because Adani's total intake of the new projects what they have taken is more than 22,000 megawatts. And NTPC has taken nearly 12,000 megawatts, more than 12,000 megawatts. Together they contribute substantially out of the total 47,000 megawatts of ordering which has been done in the last 18 months. Therefore, there is a substantial balance ordering in the main power plant sector itself, which can open up the opportunity size, which can be between 30 to 45,000 crores. In segments of ETC, and then the civil, structural, and other miscellaneous projects. There are another key element of this capacity addition is that the annual capacity addition, which had come down drastically, is expected to go to 8 to 10,000 megawatts. And since O&M, we have got a very strong presence and we have got a substantial penetration in the market. It is expected, about 1,200 to 1,500 crores of opportunities will be generated every year in the next 5 years based on these capacities added. Now, this is one part of the power sector business, which is about 48,000 megawatts, which has been ordered by the developers. But there is an ongoing investment which is going to come up with the new developers. That is another 40 to 45,000 megawatt is there. That is perhaps to be ordered in the next 2 years based on the development phase and all. Therefore, we expect a bullish phase in the power sector development, both for our traditional business of construction, then the civil works, structural works, and other miscellaneous works. And then once it is commissioned, the O&M in at least 7 to 8 years is there. That is one of the key things. Now, the new business areas, what we are focusing is particularly in the infrastructure side, railways, and then about 30,000 crores of ongoing opportunities we are tracking it, and that should take us reasonably well to the targeted program of achieving order booking of about 10,000 crores. And the new investment, other new investment which is expected is in the steel sector is opening in a big way. Particularly, SAIL is planning to invest more than 1 lakh crore, and ISCO Banpur has already started issuing the pre-tender inquiries, and we are participating in that. That is mostly related to those installation jobs, service jobs, and civil structural work, which is our domain strength. And that is expected about 8 to 10,000 crores in the next 3 to 5 months. That is a major area of investment for us. Then there are opportunities in the other sectors also. Then, for example, NMDC, they have got a planned investment of 50,000 crores to enhance the capacity of the iron ore from 50 million tons to 100 million tons. And we are in continuous discussion with the NMDC. NMDC has also started the tendering process. 3 BOT tenders are already notified, 2 in NMDC Kirandul, 1 in Thonamalai, and that is one of the areas of interest because iron ore is going to be demand is going to be there, and we would like to see how we can enter that business and with the expertise what we have developed in the MDO business and BOT business. Therefore, these are the 2 significant developments which can be there in the next 6 months. And as I already said, the ongoing tenders of nearly 35,000 crores, that is on tracking, and that should take us reasonably well for meeting about 10,000 crores of target. And export jobs also on the O&M side and the maintenance side, certain initiatives are being taken place. That is going to happen. And O&M side also, we had some successes in this year also, and based on the commissioning program of the balance new plants and all, we are keeping a track on that, and that to be continuously focused. This is what I would like to say. Thanks. Thanks to the team.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vinay from Hathaway Investment. Please proceed.
Yeah, just wanted to understand how much is your outstanding receivables from the JJM projects?
Its receivable is around 226 crores, sir. 226 crore, and after that, the last 1 year, there is no fund allocation to this project, and the work executed to the extent of 220 crore of work is under certification. So total 446 crore is the total receivable and WIP together.
Okay, and in your total book, how much is your unbilled revenues?
220 crore.
No, that's for JJM projects, but overall?
Overall is around 960 crore.
Okay. And one just, sorry, you're saying something?
160 crore. In that, if you remove this 220, roughly 700 is the regular operation business.
Okay. Just on one thing, you're dependent on power sector, especially thermal power plants. is very substantial. In the long term, post the 2030 scenario, are we looking at any kind of reduction in that from the environmental point of view? And how would the company be looking at it? It's a very long term, but still.
But very correct also. After all, ultimately the CO2 emissions has to come down in the whole of scenario. And this is a short-term measure of 7 to 8 years because of to maintain the, I think we have discussed this matter many times over the grid stability, and that's why government's plan is to add up 80,000 megawatts to 1 lakh megawatt. But ultimately what happens, these power plants also has to run another 25-30 years minimum, and then somewhere in 47 to 50, perhaps, they will looking at a downward trend in the emissions and the decommissioning of the power plants. But what will be there? There will be a uptrend in the business in the ETC segment and civil and structural in the next 5 to 7 years. But afterwards, O&M also will be there. As a price of O&M business will substantially go up. As I said, 1,200 to 1,500 crores is the opportunity, and we have got a huge penetration in the market and ownership there. And that should continue to rise in a big way. Therefore, to some extent, that will definitely be made up. But what is going to be the other scenario is that the non-power sector, steel sector, infrastructure side, and then petroleum and this one, oil and gas sector also, new plants are expected, and there we can possibly look for diversification and with experience what we have gained it. Like Andhra Pradesh, they are planning to put a 60,000 crore capacity plant, and then Madhya Pradesh is coming up. Then steel plants are planned to, SAIL has told you about 1 lakh crores of investment. ArcelorMittal is coming up. JSW is coming with a huge investment in Maharashtra. Therefore, in all these areas, already company has got some sort of a penetration, expertise and experience, and that will be enhanced into where these gaps will certainly happen, and therefore we are confident we will maintain our growth.
Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please proceed.
Hi, good afternoon, sir. So my first question is on the large BOP opportunity, especially from the likes of NTPC. So there was the Gadarwara, there was, I think, one more Navinagar. There's the third one which will come up, I think, for the bidding is the Telangana, right? I don't think we have participated in those large BOP opportunities, be it Gadarwara, be it Navinagar. I just want to understand, is it that we don't have pre-qualification for the large opportunities, or do you think, is it not wise for us to bid for the large projects? What is holding us back that we're not even participating in those large tenders?
Yeah, Mohit sir, this is Rohit. Thanks for the question. I think it's very relevant, especially considering the fact that we recently won a BOP order with BHEL for Singareni thermal power plant in Telangana. So by the time these tenders have been conceived, NTPC took a slightly different pre-qualification route, in which we were only qualifying as a consortium partner, along with other players who would bring in some kind of expertise. And then later on, one more evolution has happened, and then this pre-qualification criteria had come up, and through this we are qualifying and going forward. And NTPC has also chosen a bulk tender route, right? So I think our focus is mostly on unit capacities, where there is one unit of 800 megawatt being set up, or two units of 660 megawatts that are being set up. And we should, going forward, you'll see us participate in a lot of these tenders. Yeah, that's the update on this.
Understood. So Navinagar is pending. Navinagar should come up in next 1 year. So we should be able to participate, right? Correct? Is that fair understanding? Because Gadarwara and Navinagar is done. I think we are not one of the participants. And they also have a large opportunity from most of the states, right? Like most of the states of BHEL have won the bid, won the tender. So how is the BHEL pipeline looking like? We have seen a lot of tenders. tenders from BHEL side, are we only looking for a particular kind of packages, or are we also do we have the capability to do this CHP, EHP also? Yeah.
See, we have developed expertise not only in the traditional ETC business, O&M business, the power sector. We also developed the expertise to handle the one of the key packages in the balance of plant and the supporting packages on the coal handling also. That is, we have done about 4 or 5 contracts, and we are getting that experience. That should help us. But basically, BHL's outlook will be is that they will continue to drive the orders because L&T is there unless the government takes a policy decision to import the equipment from outside. I don't think that will happen. And BHL had the wherewithal capacity to do 60,000 megawatts per year a couple of years back. And of course, we have seen the downward trend and all those things happen. Now it has picked up. And looking at the long-term investment, at least 7 to 8 years, BHL should be ramping up their capacities, and they should be reasonably able to bid for all these things, and they will be continuing to be a key player because, as I said, the 47,000 megawatts what has been ordered by the developers, still some substantial ordering has to be done by the various vendors like Adani and even NTPC for the new tenders what they are going to call. And also all the various utility companies, utility companies have got a share of more than 12,000 megawatts. And that also has to come up. Of course, to some extent they have started ordering. Then balance ordering of the, as I said, the 46,000 megawatts, new developments which are going to happen. Therefore, these 46,000 megawatts will be a substantial chunk of the order which will come up in the next at least 2 to 3 years, which will be reasonably shared substantially by BHL and to some extent by L&T also. Therefore, we should be having a long-term plan for at least executing 8 to 10,000 megawatts in the next 10 years.
And then also just adding what sir had said, so the recent BOP package that we won entails us to construct a coal handling plant, ash handling plant, which is an expertise that we have developed over years. As a construction company, now we are just adding engineering as an expertise. We have partnered with Tata Consultancy Engineers, TCE, and also procurement is anyway a commercial activity, and hence our entry into this space. And also going forward, as I had said earlier, we want to participate in these state utility projects that are either planning on separating the BTG and BOP or are awarding the entire plant to an EPC player like BHL, and then we don't mind subcontracting under BHL or L&T to take up the BOP EPC works and BTG erection works.
Understood, sir. Thank you and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Mahesh Patil from ICICI Securities. Please proceed.
Yeah, hi sir. Thanks for the opportunity. So my first question is on the steel opportunity that you mentioned, right? So just if you can explain what exactly are we doing there and how much is our opportunity in terms of, if we consider a cost of steel plant, say capex for 1 MTPA, how much will be our opportunity if you can quantify?
Because the long-term investment profile of the government is to invest about 10 lakh crores in the next 5 to 7 years. It is because the present steel capacity of 200 million tons, where in the last year's production was 152 million tons. That has to go up to 300 million tons of capacity addition by 2030-32. And as we have seen, a 5 million ton, 4 to 5 million steel plant needs about 35 to 45,000 crores of investments. And all the players, for example, SAIL has got a plan, clear plan they have established. First, I think it is ISCO 1-4, then they will have a plan for the Bokaro and then Rurkela expansions also. Then ArcelorMittal is coming with a greenfield plant in Andhra Pradesh and some expansions will be there. JSW Mittal and JSW and then JSPL, both are planning capacity additions. And then there are some new players also coming up. For example, Rashmi Group is coming up with an investment of about 10,000 crores. And there is a group available in this one, Ballari-based mining groups also. They are also planning investment of about 15 to 20,000 crores. Therefore, the total investment of more than 3 lakh crores will happen because of the continued to be growth of the, of course, steel is linked with the growth of the economy, and as the economy grows, the steel requirement also demand has to be there. In fact, many of the steel suppliers are also complaining that why we are importing also material from outside. Therefore, we have already had an experience of doing steel plant construction in JSW Dolvi and then JSW Vijayanagar, and ongoing we are doing some jobs in JSPL. And our construction experience and our O&M experience and our project management experience, what we have developed over the years in the power sector will be rightly used for the steel sector and also in the mining sector, for example, NMDC jobs and the mindset facilities which they are going to create. Therefore, this is where we are quite bullish on these two areas.
Okay. And sir, in the on the MDO side, what is the production that we are expecting in FY26 and 27?
First mine, which we took with CCL, Central Coalfields Limited, we anticipate to do 1 to 1.2 million before March 26, so which is going to translate to 140 to 150 crores in top line. And the other mine, which we took with SAIL, the 4 million metric tons per annum one, we anticipate to do 360 to 400,000 tons before March, and we are already on track. We have done half of that already, and this is going to translate to 57 to 65 crores in terms of top line.
Okay, sir. Thank you so much.
FY27 ramp up in both the mines. There is going to be significant ramp up in FY27. FY27 KTMPL, the 4 million metric tons per annum with SAIL, we anticipate to reach peak rated capacity. And the first mine in which we are going to do 1 million will get ramped up to 2.5 to 3 million by FY27. Translating to a combined top line of 550 to 600 crores.
Thank you. The next question is from the line of Pritesh from Lucky Investments. Please proceed.
Sir, just an observation, and I don't know how the company is looking at this. So if you look at the last half, basically the first half now, and also the second half last year, if you see the financial deleverage is kicking in with the rising debt because of some of the receivables which have been stuck, working capital being expanded, and the investment which is done in the coal assets which is not yielding the necessary desired revenue. If you see your even coal business is the focus has been postponed by in excess of 1.5 years easily. So how are we reviewing this situation? You may have your 15-20% top line growth, but nothing slowing down to the bottom line. So how should we be viewing as a management this situation?
Sir, what you said right.
What are the guardrails? What are the steps taken?
See, the major increase in the working capital utilization is because of the Jal Jeevan Mission water spending. If you look at the March, I have a receivable of around 287 crore, and where as of September it is 200.
So we know the figures. We know these figures. What should be done? We know the figures. We know the opportunity incremental in your inflow.
We are pursuing with the client government, sir. Recently we have met this chief minister of UP government, called for all the clients, and they assured us that they will certify these bills by in a couple of months. They are at least releasing the funds from the state funds. So we are hoping by March we'll bring all this into the control, and we'll reduce our working capital utilization with that receivable, sir.
See, we were not active in water. We ended up paying some of these projects at the back end. So any review process that you implemented incrementally?
So the washery, as of now, we have not raised any new loans, and we have raised a QIP of 240 crore. That 200 crore funds still is with us, so we are utilizing that for the current year, and the next year only we'll raise the borrowing, sir. By the time we will also recover our existing receivables and certifications will complete, and we'll bring this to the normal.
Okay. And from the execution point of view, what kind of revenue execution that you see ex of mining this year in FY26?
Around X of mining around 256 crore, around 6,000 to 6,200 crore we can achieve from the regular business, sir. 250 crore we projected from the mining business.
And how much was mining business last year?
Last year it was around 84 crores, sir. Around 84
So
crores.
basically 5,150 crores in EPC and moves to basically 6,200 crores.
Yes.
Okay. Thank you, sir.
Thank you. The next question is from the line of Hitali Shah from Shriram Mutual Fund. Please proceed.
Hello. Yeah, thank you for the opportunity. I wanted to ask you, what is the split of the order book and order inflow of the various segments, like civil and mechanical O&M and all of that? Hello?
1 minute, I'll explain. See, yes, sir. So total 14,226 crore of, as of 30th September consists of 1,700 roughly from the mechanical business, power erection business. 9,000 crore is from both power civil and infra civil. O&M of around 2,700, electrical business of around 800 crore. So we have a domestic of around 14,000 crore and international order of around 220 crore. So from power side, the mix is 8,300 crore is from power side, and infra side is around 5,900 crore.
Okay, sir. And for the order inflow?
For the order inflow this year, we are projecting 10,000 crore. We are projecting erection business around 2,000 crore. From the civil business, 2,400 crore. O&M around 2,600. Electrical business of around 300. Apart from as a new initiative, we are starting the solar and other green energy projects we are targeting. So we received around 159 crore orders during the year, and BOP EPC of around 2,555 crore. So around 10,000 crore. This is a mix of various segments.
These orders are expected, right?
In the sum of orders we achieved 4,900 crore of orders we already received, and the balance we are expecting before March.
Could you give the split of the 4,900 crores in these segments?
In that, we received mechanical business of around 49 crore, civil business of 1,500 crore, and O&M business of 761 crore up to September. During the till date, we have received around 2,570 crore orders from the BOP EPC. So for the mechanical new SBU addition of EPC, around 2,550 we added.
Okay, thank you so much, sir. And what will be the execution timeline of these major projects that you just listed out?
Generally, it will be 2.5 years. It's typical. 2 to 3 years is the general typical. For the EPC, it is 38 months, ma'am. So it's roughly 3.5 years for the BOP EPC.
Okay. Thank you, sir.
Thank you. The next question is from the line of Parani from Avendus Spark. Please proceed.
Good morning, sir. Am I audible?
Yes, sir.
So I have a conceptual question on the power sector. One, if project cost is around 10 crores per megawatt in the thermal side, what is the scope for Power Mech to say get opportunity or orders from this particular 10 crores per megawatt?
You are correct. 10 crores per megawatt can be with including the IDC cost. But the EPC cost can be 8 to 8.5 crores depending on the scope and responsibilities. With a single unit, it can be more. With 2 units or 3 units, it can be slightly less. And now it is standing at greatest order BHL has got is 8.3 crores for NTPC only to 60 megawatt. Now, as far as the opportunity in this for BHL, for the Power Mech is concerned, there are 2 sectors of the business. The main plant side, the total investment can be around 55% of this 8.5 crores. And normally the service portion of it, we can say it will be around something like 1,000 crores will be coming in the main plant for each unit, for each plant of 2 units. That is suppose 16 megawatt is there, about 1,000 crores can be the opportunity there. That is the main plant. And the balance of plot, entire thing opportunities available, whether we want to bid on the service side of the business or on the balance of plant of the business, subject to the qualification. And balance of plant will be anywhere between 3.5 to 4 crores. And that is also in some segments, if it is called individually, we can bid also for the coal handling and material handling and then civil structures. Then for the other miscellaneous civil works like IDCT, cooling towers, and various other jobs, structural jobs, etc. Therefore, we can say, including the civil works, structural works, civil, then service portion of the installation wise, we can safely take as 25 to 30% is the opportunity available out of this. Pardon?
So 30% of 8.5 crores.
Overall, that is the maximum.
Okay, so 30% of 8.5 crores. So this will be during the project construction, and O&M comes in the operational period, right? O&M opportunity,
that will come between 11 to 15 lakhs per megawatt per year. And then one more thing is that where BOP is there as a complete package, as I already told you, that will be the complete opportunity on 40-45% of 8.2 crores as an opportunity for the BOP.
Right. So, coming to the next question, you mentioned about 46,000 megawatts yet to be awarded in the coming years, plus about 12,000 megawatts from state utilities. So I can roughly take 40% of this overall opportunity to be our long-term opportunity, right? During construction.
The total ordering which has been done in the last 1.5 years, which is under execution at various stages, is roughly comes to about 47,500 megawatts. So what I said was, this is, you can say mostly ordered in the EPC mode or on the main plant side. And in the case of Adani, they have taken a different route. They are ordering the main plant on the equipment supplier, whereas the balance of plant and the services job, they are awarding themselves. Therefore, that also as an opportunity is available for a contract like us. Apart from that,
so sir, overall, to answer your question, in this capacity, 55% will be our opportunity.
Understood. So basically 46 plus 12, that is around 58 gigawatt. 58 gigawatt
into 8.5 to 9 into 60%.
Okay, 8.5 into 60%. Okay, got it. So that comes to around 3 lakh crores. Okay, fine. Yeah, got it. Fine. So my second question is the ability to actually foresee this 46,000 megawatt and 12,000 megawatt upcoming thermal. Is there assurity that this will happen in the light of say storage capacities ramping up or becoming more prevalent? And do you foresee any delays or this not actually happening in the next 3 to 5 years?
Planning by the CE and the Power Ministry. And even the customers also have been identified, like, Adani NTPC is having plans in expansion Patratu, Meja, and then Obra, Naripalli, Tata Power is got plans, Vedanta has got plans. Then, for example, SJVN Buxar has got a plan to add one more unit. CAL Coal India wants to enter the power sector also. Then JSW and JSL both are planning it. NLT is also planning it. For all these people, either in a brownfield or a greenfield, they are going to put up these plants. That is the capacity has been arrived at it. It's a question of, in terms of timing and execution, it is normally a development process in terms of environmental clearance, land acquisition, investment, achieving the financial closure. This we all have seen. There are certain always certain things can be there in that which can take the project forward, or some slowness is there. But these capacities are a must to balance the grid capacity for under 7-8 years. It should be established. Therefore, positively is expected to come up.
Okay, sir. My final question, since we identified the opportunity as 3 lakh crores for this 58 gigawatts in the, say, medium to long term, what would be roughly our market share or expectation to win over this 5 to 7 year period on this 3 lakh crore of opportunity?
No, you can take, as I said, on the upper side, if you take, it's about 30% on the service side, on the civil structural services side of the installation, and if it's a balance of plant, we can take about 35 to 40%, 45% easy.
You're talking about the market, right?
Everything we get qualified there.
Yeah, that's the total available market again. But out of this 3 lakh crore, close to 3 lakh crore, we anticipate to bid for at least 2 lakh crore worth of these projects, sir. And in power sector, our traditional hit ratio has been 50 to 60%.
Okay, got it. So essentially 1 lakh crore. 2 lakh crore will bid, 1 lakh crore, potentially inflow.
Yes. Idealistic scenario, a little conservative number is what I gave you.
Understood. Great. Thank you so much. And all the best.
Thank you.
Thank you. The next question is from the line of Deepak Poddar from Spire Capital. Please proceed.
Yeah, I'm audible, sir.
Yes, Deepak.
Yeah, thank you very much for the opportunity. So just wanted to understand first up on the MDO side, you mentioned, I think, this year around 225 to 250 crores and next year 550, 600 crores of execution that we might do on the MDO side, combining both the mine. So what sort of margin profile we are looking at both this year and next year at MDO level?
This is now just started the production because Tasra has not yet reached. We are using only the small capacity of production. We are doing monthly around 50 to 60,000 of tons. Whereas KBP just started this year and slowly will ramp up the production. So on an average, we may get around 15 to 16% EBITDA blended together.
And Deepak, also most of our margins in both the mines, they'll kick in when we achieve PRC. For the sale mine, we expect to achieve PRC in FY27, March FY27. That's when the washery will also be commissioned, commercial operation of the washery shall be declared, and we'll get our full mining fee. And the EBITDAs are expected to touch 26 to 28% around that time. And the first mine, the CCL mine, 5 million metric tons per annum, we are expected to achieve 5 million metric tons per annum in FY28. But there's going to be a gradual ramping up. Right now we are doing around 14 to 16 and it's going to ramp up all the way to 20 to 22 in this mine when we achieve the peak rated capacity.
Understood.
Yeah.
So at below peak capacity, I mean this year we are still expecting 15-16% margin at 250 crores kind of a scale, right?
Yes, 14 to 16% margin at a 250 crore turnover scale.
Understood. And when next year, I think, at the SAIL mine, you are still expecting peak PRC, achieving PRC next year, FY 27 itself.
Yes.
So there, FY 27 at 550-600 crores, a 19-20% EBITDA margin is achievable.
PRC in March 27, which means there's going to be a ramp up from the current 60,000 per month, which is translating into 360,000 per annum. There is going to be a ramp up of 360,000 to 4 million metric tons over the last 5 months of the financial year.
Okay.
Right? And the washery is also going to get commissioned. We want to commission it by July next year, and we want to declare COD by September. And we want to be ready around the time when washery gets commissioned. We want to produce we want to enhance the capacity. By the time the washery gets commissioned, we want to be ready for 2 million metric tons per annum. And when it gets commissioned, we want to ramp up to 4 million metric tons by end of March in 5 months. That's the plan.
Okay. And peak revenue, I mean, combining both the mine can be around 1,800-2,000 crores per annum. Would that be a right assumption?
Plus 2,000 crores because of escalation and all of that.
So plus escalation.
And so at 2,000 crores, what EBITDA margin of 25% is what that we might be envisaging at peak.
Yes, sir. 23 to 24, to be 23 to 25 also.
And this peak MDO 2,000 crores will achieving by which year? FY 29, FY 28?
FY 28. Both the MDOs PRC, peak rated capacity, will achieve by FY 28, but SAIL mine we are going to achieve PRC by FY 27. And it's going to continue through 28 also, but 5 million metric tons per annum CCL mine will touch PRC in FY 28, towards the end of FY 28.
Great. And so understood. I mean, basically you are expecting a big ramp up in your mining revenue from FY 28, from FY 27 to FY 28, right?
Yes, exactly.
Okay, understood. And secondly, I mean, you spoke about your business mix. I mean, currently 75% is the power sector, right? So you are coming up, looking at new opportunities in the steel sector. So how do you envisage, even railways you spoke about, right? So how do we envisage your business mix changing, which is 75% power, and all these new sectors, how's the margin profile?
So the margin profiles are concerned on an average, as of now in the construction we are getting up to 10% is the EBITDA margin we are generating, and O&M and MDO, once we reach the peak rated capacity, are the main driving force for increasing our EBITDA margins. So O&M is giving on an average of around 15 to 16% of margins. So business mix is concerned, right now the power is the next 2 to 3 years, power orders will come more. And parallelly we are also looking at the steel opportunities also. So more or less the margin will be 5% here and there. We are maintaining at the same level of percentages.
Okay, so the 75% will continue.
Yeah. The 75% will continue with power, thermal capacity addition and O&M capacity addition also being a major driver for the EBITDA too. There is going to be slight EBITDA improvement because there is O&M mix getting added as we see new capacity that's being commissioned every year. And international O&M is also doing good. We are achieving good profitability levels there. So international O&M is growing at 25 to 30% year on year, CAGR. So that's also a good sign. So we see this add to the EBITDA margin slightly.
Sure. Understood. And just one last small thing from my side. So you spoke about the guidance for this year. So anything you want to talk about for FY 27 as well, given the scale up and the a high margin revenue mix will increase for FY 27.
So see, this year we projected around 25%. Year on year we are projecting 25% growth, but being the volume is increasing and we are adding the more MDO business during the next year. So we are in the line of 20 to 25% between only we are projecting, sir. Maybe are in the range of around 7,500 to 8,000 crore.
And what margin profile?
It will jump, sir. Maybe around 0.25 to 0.5%. It depends on the mix of MDO and the O&M business.
No, so how much jump you mentioned? Your voice was not audible.
0.25 to 0.5% between.
0.25 to 0.5%.
At an EBITDA level.
Okay. At the EBITDA level.
Yeah.
Fair enough. That's very helpful, sir. All the very best to you. Thank you so much.
Thank you, sir.
It is a capital. Hello?
Madam Shruti. Hello?
No, 1 hour, I think.
They will take extension.
Hello. Mr. Tari, your line has been unmuted.
Yeah, hello.
Yeah. Yeah, please carry on, madam.
Yeah, so we have seen headwinds in the electrical segment for a few quarters now. So I would like to understand what is the headwinds there.
We received railway civil signaling and telecommunication and overhead electrification works in the state of Chhattisgarh. 2 packages, 2 projects we received during last year. So these execution and supply of material we supplied during the year, and we are executing these projects. That resulted the increase in the revenue compared to the previous year.
Okay. So are these expected to continue, or is there any improvement expected in this segment?
Yeah, the transmission distribution, we are slowly closing the shop. That is not fitting into our DNA. We are slowly closing the existing projects, and we are taking up the new jobs in railway works, and this team will execute going forward all these techno cum civil cum techno works. They will take up under the division, and they will execute. We are targeting.
So that those segments will replace this one.
Yeah. So
yeah. I would like to understand the opportunity in the renewable energy segment, like in nuclear, battery energy storage, pump storage, and all of that. If you can share that.
Ma'am, while we continue to focus on renewable energy projects actively, but there has also been a lot of irrational bidding. Our primary focus was on solar and battery energy storage systems on a boot basis. But we see a lot of erratic bidding trends currently, so we have slowed down in bidding for projects there. But you'll see us in a few bids, and we continue to focus on solar plus battery energy storage systems. Now, it's a small pivot to as what we were doing earlier than a standalone basis. Now we want to combine these expertises and bid for a few projects. Again, with healthy discoms and healthy utilities.
Can you share a number of any opportunity in the solar and battery energy potential opportunity?
See, FY 26, we already won a Kusum Yojana project of 13.5 megawatts of AC capacity. Next year, we plan to enhance this to 100 megawatts of solar and around 200 to 250 megawatt hour of battery energy storage system capacity. So those are the numbers we are looking at. This is FY 27's projection.
Okay, thank you, sir. That was really helpful. And sir, are you projecting any cost escalations in your current projects that you're handling that can affect the margins?
No, majority of the contracts we have that clauses, and the price escalation is passed through. So we are not losing any money. There is no cost escalation because of the escalations. So we are getting the escalation amount from the clients.
Okay, thank you, sir.
Thank you. The next question is from the line of Preet from Wealth Advisor. Please proceed.
Yeah, hi. I'm sorry I joined a little bit late, so I may have missed out. But did you give any guidance for the full year of, say, achieving the 6,500 crore turnover? Is that still on track, or are we changing that guidance?
So the second is 6,500 is linked to the MDO projections also, and maybe 1 or 2% slippage may be there because of delays in getting the new orders which we anticipated during the year. So most likely we may touch around 6,200 to 6,300 level of business during the year.
Sure, sir. Sure, sir.
And sir, still represents an 18% growth.
Yeah, absolutely, sir. I think a 20 to 25% growth still is good enough. The other question I had was again on the margin side. So do we see a 0.25% bump for FY26 over FY25? Is that a possibility?
More or less, we'll have the same level as last year, sir. And it depends on the mix of any new orders of Poindam and increase in the MDO may probably jump the number. But at this moment, we are estimating that this is stable at the last year level.
Understood. And do we have any plans for raising funds?
At this moment, no, sir. If any new opportunities comes up for any investment opportunities, then probably we'll approach the market.
What should be our net debt levels at present?
Around 360 crores, sir. Net debt is around 360.
Got it. And on the similar line, we should expect a 18-20% jump in top line for FY27 with margin increase of at least 0.5% given MD orders.
Yeah, we are projecting the same line of 20 to 25% between we are projecting for the next year.
Yeah, and with a margin increase of not 0.5, sir, is 0.25 to 0.5.
Okay, noted. Perfect. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vinay from Hathway Investment. Please proceed.
Yeah, just one clarification I wanted. In your previous answer, you said that the potential for you in electrical, the power sector is around 1 lakh crores. This would be over, 3 to 5 years? What time frame are we looking at in this 1 lakh crore?
No, it is like this. The opportunities, what has been mentioned is based on the balance ordering to be done on the main EPC orders already ordered, which is there some of the items like, main plant services work, balance of plant work, then structural work, civil work. That is substantially, it is there to be ordered by BHL, to be ordered, Adani has to order, then NTPC also has to order. The other thing what we said was the new investments and developments will come in 46,000 megawatts new plants. That has to take shape. That will be continuously be there next couple of years. And where the EPC orders have been placed by NTPC, Adani and utility companies in the last 6 months or 1 year, there, the ordering has to be done more because, they have to ramp up the ordering. That is where, we said that initially we can have immediately about 40 to 50,000 crores and the balance 40, 50,000 crores will develop in the next couple of years.
So even if I take, say, 1 lakh crore over a period of 6-7 years, we are looking at around 14,000 crores per year, roughly. I mean, not in the same linear method, but is that the number? Because, or am I getting it wrong?
Should be reasonably okay.
And that is only in the 75% of your
potential also, which will add up every year 1,500 crores.
And we are currently doing around 6,500 crores a year. So,
yes.
Is that the jump that we are looking at?
Yeah.
Okay. Thank you very much.
Thank you. The next question is from the line of Amay Sharda from Purnat Investment Advisors. Please proceed.
Hi, thank you for the opportunity. I just had one question. Why was there this huge increase in the mechanical segment revenue to 435 crores? And do we expect it to sustain for the rest of the year as well?
Yeah. See, during the year, there is a slowdown happened in the FGD orders are concerned, and suddenly there is a government direction, they have given a direction, and the UDP project, which was in the slow progress, And now the Adani has given an instruction to complete this project by March. So because of that, they started doing this execution since last Q2 onwards. So that resulted more order execution in the power sector.
And what is the size of the Udupi project?
Around 936 crore.
And we expect it to complete in this financial year?
This financial year. Yeah.
Okay. So we expect this momentum to continue for the rest of the year.
Yeah. By before March we will complete. So we can expect this level of order execution till March.
Okay. Thank you so much. Thank you.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to the management for the closing comments. Over to you, sir.
Thanks, madam. Thanks for our investor community and our colleagues here. I think as projected by Arvind and also Rohit, and as we discussed with the very interesting questions and all, it is reasonably assured to say that we will be on track in achieving the targets on the ordering about 10,000 crores because we are almost near to that 50% in the by end of this beginning of the third quarter, and with a lot more opportunities are coming up and new segments of the business we are looking at it. On the revenue side, we have seen the third and fourth quarters are always will be upstream will be there. That is where the 6,200 crores will be reasonably possible. And with these type of opportunities and the investments coming up, I think particularly in the power sector, steel sector, infrastructure side, railways, and other segments, perhaps we will continue to we'll continue to focus for the growth in the coming couple of years. And another area perhaps we can look at as a interest and diversification in data centers. Of course, data centers development and the software part of it is different, but the hardware part of it is an interesting point because these data centers need a lot of power capacity, substations, which is our specialization. Then it needs a lot of infrastructure works in development, civil works, and then other facilities, balancing facilities. So that is a segment which we can gainfully use it based on the expertise what we have gained. And there are other sectors also which come. I said refineries can come up, and apart from the steel plants, all those areas will be available.
Thank you. On behalf of Nirmal Bang Equities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.